This interview is for information only and should not be considered as investment advice or a recommendation to buy shares in the company featured. Welcome to this Stock Box interview. Well, hello and welcome back, of course, to Research Talks here from Stockbox with Alan Green and Dan Flynn on what is a very warm week in the UK. Certainly is in Yorkshire, where I am today. How about you, Dan? Let's go to you first. What's it like?
Yeah, we got a few days where it was a little bit cooler, and now, as Alan put it last week, it's oppressive again, isn't it? So,
oh, you're oppressed this week. Okay. Yeah.
And I remain oppressed. Yes.
Okay.
Not easy.
Not easy being oppressed. No. Okay. Okay. Well, yes. I mean, it is warm, isn't it? It still hasn't beaten the 37 that we had in The Hague a couple of weeks ago.
Wow.
But it is still warm. But yeah, I mean, what an interesting. I haven't actually been looking at the markets this week, but I know you have, Dan, and I presume Alan has as well. Bitcoin, all-time highs. Yeah,
it's been powering up, hasn't it, over the last not even 24 hours. It was started yesterday evening. It's currently around $118,000. I'm trying to work out if this is a good or a bad thing for the treasury companies, because on the one hand, it means the assets, the Bitcoin they hold is more valuable and there's likely to be more general interest in the sector. But on the other, it means accumulating it and buying it's going to be more expensive, particularly if it continues to rise. If you look at some of the predictions for it reaching 200K in the not too distant future. So I don't know. It has to be good on balance.
I think it probably has to be good, doesn't it? Because it will bring again more confidence back to the sector. It will bring other people in, other institutions in, probably. So I would say it's probably generally a good thing. But yeah, you are right. It will mean that companies can buy less, but hopefully that means there's more capital available. So they just have to raise more, don't they?
Yeah. I think it'll all work out. But that being said, it will be interesting to see how they trade over the next few days.
Indeed.
It stays where it is or goes higher.
Indeed. Yeah. Okay, good. And Alan, have you noticed anything this week interesting of note?
Just to follow on from what Dan's saying, really, I mean, a lot of the companies that are adopting the Bitcoin treasury policy, I note, as we're talking, Sunday Bar have just announced the same today, implementation of Bitcoin policy. You don't just switch that on instantly. That's got to be put in place, and the correct controls and protocols have got to be put into place as well. And I think, as I said last week, a lot of people are appointing advisors to oversee that process. So that's great, but that takes time. And of course, with Bitcoin racing up where it is, as Dan pointed out, is it a good thing or a bad thing? I think longer term, it has to be a good thing, because Bitcoin, to me, only seems to be going one way. But we've seen sort of a fairly sort of active week in the markets, but I think this sort of threat of Donald Trump and these escalating trade wars don't seem to be concerning the markets overly. And of course, but he did announce, of course, overnight that a 50% copper tariff will come into place on 1st of August, and also 50% tariff on goods from Brazil. So if you're exporting from Brazil into the States, all of a sudden it's going to cost it's going to cost you 50% to move stuff across the border. So that should result in some interesting outcomes, given the broad range of products that they bring to the US. But anyway, I think overall the market there is a sense of buoyancy. I think and positivity. We don't seem to be going away for summer anytime soon. In my opinion, I don't know if you felt that.
Yeah, well, sorry, yeah. I mean, I've just come in. I mean, we said last week, didn't we, about the budget that was passed, and of course, basically the M2 money supply and where that would find its way through, and that's perhaps what we're seeing already. But it does give a bit more interesting summer period than normal, perhaps.
I mean, the FTSE's powering on to new highs, and given the macro backdrop, you'd think that perhaps it would be a little more muted. But whether the underlying reason for this positivity is Bitcoin's performance, it's got to be part of it, and of course, gold is performing well too. So yeah, it's a good thing. I think we've spoken before about, and I can remember all the way back to the .com boom when that happened. There was one particular summer where the markets just powered on through the summer. There was no summer lull, as it were. Everyone was expecting it to get quiet for July and August, but that's what really happened.
And then what? Was there the crash afterwards? Is that?
Well, yes, it crashed. I think about a year later, but
Okay.
yeah,
Going
so,
on.
but
We've got a year.
Yeah, but it was sustained for a long period of time, and of course that ripple effect that we've been talking about, where Bitcoin Treasury ignites the market, but also that ripple effect spreads into other sectors too. The same happened with the .com boom. It just touched everything. So yeah, I'm feeling quite positive.
Good. Well, we've got a few companies to talk about as usual. So Dan, you're going to start us off with ECR Minerals. I know you wrote a report for them recently, so bring us up to speed on your take on ECR.
Yeah, so I've been doing some work with ECR this week, speaking to a company, and created a research report looking in depth at all of its projects and where the upside could be generated from here. So this is available. I'll be sending it out through Stockbox's newsletter. It's on ShareTalk's website, and I believe ECR will share it as well. So keep an eye out for that, and do get in touch with me if you need a link, if you're listening. But in the meantime, I just wanted to go over the thrust of some of my conclusions on here, because I know you both work with the company and follow its story closely, so I'd be interested to get your takes as well. So as it stands, ECR has a market cap of around £5 million. And I think there's a decent argument to be made that the assets underpinning the company more than cover this, potentially positioning it as a recovery play. So first of all, and perhaps most importantly, ECR is targeting gold production at its Blue Mountain gold project in Queensland by the end of the year. So this asset hosts a large near-surface alluvial gold system, and the company's early-stage modelling suggests Blue Mountain can generate indicative monthly revenues of around 470,000 Aussie dollars, or around 253,000 pounds. So annualized, this equates to roughly 5.6 million Aussie dollars, or 2.7 million pounds. So that already covers a significant portion of ECR's current market value. It's important to note two things on this alone. First, those figures I just mentioned were calculated using February's gold price of around $2,790 an ounce. Gold's now trading significantly above $3,300, and many expect it to go higher still. So there's an immediate opportunity for an uplift to the economics there. But also, ECR is working currently on boosting the economics of Blue Mountain further by improving recovery grades, as well as completing additional drilling and sampling to assess the full extent of the alluvial system. Long story short, then, Blue Mountain alone could have the potential to more than cover ECR's market cap going forward. Of course, it actually needs to get it into production, but the necessary work to get a permit is underway. I think the potential for substantial low-cost gold production really increases ECR's ability to, self-fund work and unlock further value across the company as a whole. So that's a good start, right? But ECR is also underpinned by a number of additional exploration opportunities across Australia, each with the potential to deliver transformational upside. So just to quickly go through them, there's the large Lulworth project in Queensland, where work over the past 2 years has consistently pointed to widespread gold mineralization with grades of up to 14.7 grams a tonne across various prospects. Drilling program is planned for later in the year to establish the continuation of surface gold mineralization down to greater depths. There's Bayliston in Victoria, where ECR has identified antimony grades of up to 32%. and is conducting geological analysis to learn more about the potential for this increasingly high-value material. There's Creswick, where gold grades of up to 41 grams a tonne have been returned, and discussions with a potential partner are already underway. And there's Tambo, where ECR is investigating the potential for surface gold to continue at depth at the historic Duke of Cornwall prospect. So I've rushed through these a bit as I'm aware of time, but there's more in the report. And I think the important thing is, with gold and antimony prices so high right now, all of these projects represent further potential sources of upside to ECR if it can continue to deliver success on the ground and attract third-party interest that converts to some sort of project sale or partnership. But at the company's current market cap, given what we've already said about Blue Mountain, and that's the potential there, these projects are currently being valued at very little or nothing at all. So I think there's a clear re-rate potential at ECR on the basis of its projects alone. But I think it's quickly worth just touching on the corporate side of things as well here, because there's further value there. For one thing, the company has said it's fully funded for its planned work programs this year, had 871k in the bank as of end March. But also, it holds 75 million Aussie dollars in accumulated tax losses for its subsidiary ECR Australia. So these can be used by the company to offset future profits at Blue Mountain or any other projects that enter production, but they could also be sold to a third party. So the losses have already attracted interest from external buyers, and a deal fell through earlier this year. ECR remains open to the further interest it is continuing to receive from third parties. So to summarise, I think when you put it all together, the production potential at Blue Mountain, the potential deal value in the exploration projects, and the company's firm financial footing, and the potential value in its tax losses, it really does look quite attractive with a £5 million market cap. I don't know what you guys think.
Well, yeah, I mean, I followed ECR for a long time. Those tax losses, of course, were been around for a long time as well. Difficult to move on, I think, but if they can utilise them internally with getting Blue Mountain into production, which seems the way they're going, I think we've said this before, and it's quite soon as well, isn't it? We should see something fairly soon on that. Alan, I know you're very close to the story at ECR.
Yeah, that was a very good summary, Dan. You covered all of the assets, and I think it just once again highlights that the market capitalization of the company currently just stands starkly at odds with the sheer number of projects they have. I mean, there are other companies out there that have projects that are speculative projects that are valued at £8 to £10 million, and then you look at ECR that's got the Blue Mountain project, which will be cash generative and will be transformative. It'll turn ECR from an explorer into a producer. That alone should warrant a market cap, I think, well in excess of where we currently are. Lulworth is huge. I mean, Adam has been working up there. Adam Jones, the geologist, has been working up there for several years now, and there are so many different prospects up there. Lulworth, I believe, is a sleeping giant, and indeed, they're working with the Geological Society of Queensland to develop the project and bring it on. But that region is also chock full of historic gold mines. Obviously, Charters Towers is probably one of the best known, and Pachinko and others. So it's a highly fertile area for gold. And then, of course, you've got the legacy assets. You've got Bayliston, you've got Creswick that I know well, and have been going on for years, and the tax losses which are there. And I think, the company will probably utilize them, keep them in house, and use them to bring Blue Mountain into play. So all to play for. But I think at this level, it offers amazing value and a really good spread of risk too. You're looking for a small company this size to spread that risk, minimize it, and ECR, I think, probably offers the best package on the markets at the moment that I can think of.
Yeah, and I think you're right, Alan. And just as a final note on them, I think it's important to acknowledge the fact that the company, board of directors take a lot of their pay in stock, so they really are, all in on this, aren't they?
Yes, very much so.
They want it to succeed as much as shareholders do, and they're not just paying lip service to that. They're really showing that commitment in the way they're taking their remuneration.
Indeed.
Good,
Yeah.
good. Well, like I say, yes, we should hopefully see some nice developments through ECR. Well, I hope we do anyway throughout the course of the summer. So, Alan, facilities by ADF. I know we've spoken about them a couple of times before, but what's been going on?
Well, I think the company are at an interesting inflection point. So just a quick recap, facilities by ADF, Epicode ADF are an AIM-listed company, and they provide production facilities, support vehicles, ground support. When I say ground support, I mean through a company called AutoTrack. They provide so they can put a firm piece of a firm surface down, firm temporary surface down on a field, for instance, to enable a team to go and work there, come rain or shine. But they also are very hot on sustainability and using sustainable vehicles and technology to run the business. So they tick so many boxes in that regard. And of course, that's vehicles for the TV and film industry, makeup production offices, artist trailers, toilets, generators, etc., and technology vehicles. The company, if you take a look at the chart, the company's trading currently at 20 pence, giving it a market cap of just 22 million, or just under 22 million. Now, it's just off year lows. The year low, of course, was 13.5p, just off year lows. The shares dropped sharply in November last year when the company warned that the Hollywood writers' strike, so there was a big writers' strike in Hollywood that suspended production of many different series and many different TV and films, TV programs and films. And that really had a knock-on effect all the way through the industry. Contracts were cancelled, contracts were suspended or postponed, and so all the revenues they expected were of course knocked on into the future. Nonetheless, the company's persevered, it's worked through it, and we noted toward the end of last year that due to the fall in share price, a company called Harwood Capital in Gibraltar were stake building, and they'd taken their stake up from 10% to 15%. Then May this year, we had full year results, which were sort of very much in line with expectations. Revenues of 35.2 million, up slightly from the previous year of 34.8 million. EBITDA pretty much flat. But the board agreed to reduce the dividend for the year in light of the reduced profits. But importantly, visibility was improved going forward. There are a number of new blockbusters in the pipeline. New Avengers, Spider-Man, fantastic, something else I can't read that. Daredevil, Harry Potter, Beatles, Icebreaker, Slow Horses. Of course, the new season 5 is coming out shortly, and the long-term outlook is very favourable. The company also noted that current trading, i.e., trading for the first quarter of the year, that was January, February, March, was in line with expectations. AutoTrack, that's the temporary flooring or surface company that I mentioned, performing very, very well, and they were seeing inquiries increasing. Then in June, there was a further trading update. Trading remains in line, second half weighting, very cash generative. Cash balance is also in line. But I've been following this company quite closely, and the shares have just started to tick back up again. So we've been bouncing on the bottom at 17, 15, 16p, and then just briefly touching that low. And we've just popped back up since the end of June. So July is starting to see the share price tick up again. Now, I also follow the chief exec Marsden Proctor on LinkedIn, and he's been putting quite a bit of commentary up there, and perhaps some of this should be out in an RNS. I don't know, but anyway, it's amazing what you can pick up on LinkedIn. So he said the company is getting back to pre-strike levels of activity. They're currently servicing 24 different productions. Demand was increasing, and they're now able to offer 3 different products and services. That's facility vehicles, location supplier, ground protection. That's the surface, the surface providers, and also reduced emissions, sustainability, and scope 3 emissions, which I think is the very latest. In sustainable technology. So it's returning back to those levels. That comment from Marsden Proctor, the chief exec, went out about a week and a half, 2 weeks ago. So that's kind of in line with the tick up in the share price. So I think canny investors are following this company on LinkedIn, seeing what the chief exec is saying, and starting to move back into the stock. There is the company will, of course, provide a further trading update with the interim results, which I think are due in September, October. So I think it'll be interesting to sort of keep an eye on the company up to then. But a speculative buy now, I believe.
Excellent, thank you, Alan. It's interesting what you can pick up from people who CEOs or people who post on LinkedIn or the Twitter Spaces, for example. It is a kind of a grey area, isn't it, where it's not quite. Well, it's not regulated, is it? Basically, it's sort of self-regulation, I suppose.
Well, it's not. I mean, for the CEO to make a comment like that, that's very good. But that's the sort of comment you'd expect to be in an RNS. But hey, sure. That's fine, And if on the back of that, his positivity is feeding over into seeing the share price tick slightly higher, then that's a good thing. So,
well, it's always nice to see the confidence, isn't it, and the positivity of the CEO. I'd much rather that than a CEO who didn't engage at all or post. I mean, you should live and breathe your companies, I think, shouldn't you? And I think, there's a few CEOs who perhaps are. I'm not going to name anyone because I can't think of anyone, but they have multiple roles, and perhaps. You want a CEO who lives and breathes it effectively, who's really in it to succeed for both himself or herself and shareholders. So it's always nice to see active commentary from directors in the company.
Yeah.
Okay, thanks, Alan, for bringing us up to speed on that. So, Dan, you want to talk to us about Altona Rare Earths, and what's going on there? I think you're going to speak to Cedric, aren't you? Actually, over the weekend.
Yeah, that's right. I'm due to speak to him on Saturday, so hopefully we'll have an interview out early next week. Altona is a company I've covered on here a few times. I really like what it's doing, and I maintain that with a 3.5 million market cap, it continues to represent very good value. The company's had a couple of decent updates out over the last week or so I thought it'd be good to cover them again here today. So I think a quick recap is probably necessary. At its core, Altona's story right now is one of a single project that continues to deliver more and more, and that project is Monte Moambe in Mozambique. So until recently, Monte Moambe was a rare earths project, and it still is in a way. It contains a massive deposit with a 13.6 million ton JORC resource estimate at 2.42% total rare earths oxide, and it's at the pre-feasibility stage there. The issue has been that rare earths prices have been weak for some time. So while Altona continues to search for a strategic partner to continue advancing that rare earths deposit towards production, it has also turned its focus onto the other opportunities Monte Moambe presents. And as it turns out, those opportunities are very significant indeed. So first of all, the company started reviewing the possibility of developing a fluorspar mining operation at Monte Moambe last September, focusing on an area of high-grade veining known as the fluorite zone. This has advanced quickly. At the end of May, Altona completed metallurgical testing on all samples from the veins. And where it originally thought that the project was prospective for fluorspar suitable for the development of met spar, which is used in the steel industry, Turned out it was actually more prospective for the development of acid spar, which is far more valuable than met spar due to its use in the production of hydrofluoric acid, which is the only existing source of fluorine for the chemical industry. Now, Altona is currently targeting a 50,000 tonne per annum acid spar operation over a mine life of more than 12 years at Monte Moambe. And not only has it said that getting this into production would be a relatively low cost and quick affair, but with acid spar trading over $400 per tonne, at least it was in that was the figure that Altona put out. With that in mind, you can quickly see a pretty convincing argument developing for this operation alone to justify a much larger valuation than 3.5 million for Altona. Now, things have got even better on the fluorspar front this week after Altona announced that assays have confirmed high grades from another newly discovered fluorspar body at the project. This is separate to the fluorite zone I mentioned before, and essentially it offers an opportunity to bolster the economics of the proposed fluorspar operation by blending ore from two sources. According to Altona, this could result in a higher overall plant feed grade, improving the recoverability of material. Now, the next steps with regard to this opportunity are commencing advanced metallurgical test work, completing the next phase of resource drilling to expand the fluorspar resource base, and continuing discussions with off-takers and industry stakeholders for the fluorspar that is ultimately produced. So there's a lot of potentially significant news flow there. But alongside the fluorspar stuff, Altona has also found increasing evidence of economic gallium potential at Monte Moambe in recent months. Now, gallium, if you haven't heard of it before, is a rare metal used in a number of essential technology applications. And like so many metals today, its supply chain is dominated by China. This means sources in alternative jurisdictions like Mozambique are really valuable and in demand. Now, Altona first identified high grades of gallium at the project as part of its fluorspar exploration in the fluorite zone back in April. Following this, it completed a review of its soil sampling database to see if it could find any other evidence of gallium, and this led to the identification of 3 large untested gallium soil anomalies. Since then, it's completed further soil sampling and test pitting to see how much of the metal might be present. And last week, it announced that this had resulted in the discovery of gallium in 2 distinct geological settings, opening the potential for scalable standalone economic extraction. So this is less far along than the fluorspar opportunity at Monte Moambe at the moment. But when you consider that the potential value of the fluorspar production alone arguably more than covers Altona's current market cap, the addition of a potential gallium operation just multiplies the potential upside here even further. So Altona is undertaking mineralogical and metallurgical studies to assess the potential for gallium production. So that's another thing to keep an eye out for. But I think to summarize, Altona has just been adding more and more value at Monte Moambe beyond the already huge rare earths opportunity in recent months. Yet the market is continuing to sit on the company. That can only last for so long, you'd think, as it continues to progress those fluorspar and gallium opportunities, assuming results continue to be positive. So with that in mind, I wouldn't be surprised to see this re-rate quite quickly at some point in the not too distant future, Mark.
Yeah, I agree. I hope so, because I've always liked Altona as well. And maybe we'll start to love fluorspar rather than the rare earths, but it's nice to have both. And yeah, you're looking forward to speaking to him tomorrow, are you?
Yeah, no, I'm really looking forward to hearing about. So we'll be focusing on that new fluorspar body. So looking forward to hearing a bit more from him on how that's going to impact the economics of that proposed operation. I don't know if it opens the door to producing even more or extending the mine life. So
Yeah.
that's something I'll maybe asking him about.
Find out. Yeah, find out then. Yeah, good. Okay, thank you. Alan, do you have any thoughts on Altona before we finish off with Moonpig with you?
Moonpig, and yes, Altona. Again, I think the switch to fluorspar or the focus on fluorspar is great. But of course, they have these other assets too, and it's like a multi-asset company simply isn't recognised. But of course, the Fluorspar, the Monte project was previously owned by a French company, Sagem, and I believe Cedric was involved with Sagem at that point before he joined Altona. So he's got a great deal of knowledge of the project, the potential there. But Fluorspar, I know as a commodity, its value ebbs and flows. And we had a similar issue with a client a few years ago. We were working with Tertiary Minerals, and they had a Storuman project in Sweden, and that was basically that was stopped in its tracks because they couldn't get the Swedish government to agree to let them access the area, and also Fluorspar prices were low at the time, so there wasn't a commercial imperative to do that. But that's now changed, and I think when Moambi finally starts producing acid spar, as you're saying there, Dan, it's going to be a great day, and. It'll be a very important source for global industry and commerce.
Yeah, absolutely.
Excellent. Well, Alan, do you want to finish us off then with Moonpig? We've never spoken about Moonpig before, but of course, I think everyone knows what they do.
Well, yeah, it's an interesting company. I mean, Moonpig currently they currently have a market capitalization in the region of 700 million, so that they're a relatively large company in terms of the market cap size that we usually talk about on the podcast. But it's also at an inflection point. The chief executive, Nikhil Rataitha, who has been with the company for 7 years, and he, along with the results that I'm going to go through in a second, in the summer, announced that he would be stepping down, but he's giving 12 months notice in order that his successor can be brought in and obviously integrated into the role, and that it's the right person. So the shares have come off a bit, but not too drastically. We're currently trading at 216p. The shares have traded as low as 184p, and that was earlier in the year, and as high as 277p. So we're roughly sort of halfway houses. So of course, Moonpig is the eponymous gift ordering service and card ordering service. Trades as Moonpig, Red Letter Days, and also Buy a Gift in the UK, and of course in the US, Australia, and Ireland. And it also owns Greets, that's GREETZ, in the Netherlands, known as the Gifting Companion. And of course, it's great. So you forget the mother-in-law's birthday, and whoops, it's Tuesday evening. Her birthday's the next day. What do? Well, of course, you go to Moonpig.
You've never done that, have you, Alan?
Never. No, never. Of course, provided you get your card design and all the little photographs up there before 9 o'clock, you get it ordered, then she'll receive it the next day, and she'll marvel at the amount of thought that's gone into it. And that's the wonderful thing. It's been a lifesaver for so many of us. But also, if you turn the clock back and quite a few years, there was a company called lastminute.com that kind of revolutionized the holiday business in the same way. People like to go away at the last minute, so lastminute.com, what a great idea. And anyway, I digress. But that's the driver behind Moonpig, and they built a hugely successful business on the back of that. And of course, with the emergence of AI over the past few years, they've now integrated that into the offering. So AI will come up and look at what you're trying to put into your card or gift, and they'll make suggestions, and you can now get special AI stickers that go into your cards and gifts, and so on. So the opportunities for the company to earn money are increasing. It's obviously a technology-based business. They've got technology hubs in London, Manchester, Amsterdam, and as I said, they have leading market cut-off times, 9 p.m. in the UK, 10 p.m. even in the Netherlands. So if you're in the Netherlands, then you can, and you forget the mother-in-law's birthday, you've got even later an extra hour, which is fantastic. So anyway, so the company announced on June the 26th its full year results to 30th of April, and also celebrating 25 years. I mean, it's incredible that the company's been around for 25 years. So it would have started in 2000. So a very early dot-com boomer, if you like. Revenues grew 2.6%, 350 million. Gross profits up 3%. Adjusted EBITDA up 1.3%. Adjusted pre-tax profits up 16% to 67.5 million, and also a big jump in free cash flow, 8.5% to 66 million. Also, active customer base for Moonpig and Greets together combined, 12 million customers, up from 11.5 million last year. So they've added 500,000 over the year. But also the growth in the US, Australia, and Ireland is up 36.1%. So that's where the real growth is coming from, which is interesting. So in its outlook statement, the company said it was growing at double digits. It expected growth to be double digits this year. Greets growth a little more conservative, in line. But the AI generated stickers, as I say, are a big hit. The company has also implemented the share buyback campaign over the past year. It bought back 25 million of shares. It's currently, if you look at the news flow, you see a lot of transactions that have taken place. Those are share buybacks. They'll buy back 60 million in the current year. And as I say, Nickel Retire will step down after 7 years. Now, the next big date is September 17th, where it's the AGM, and I imagine they'll probably release some sort of trading update at that point too. So given the fact that the shares have come off over the uncertainty of the CEO departure, I see a bit of an opportunity here, and an opportunity also to participate in the company that's paying a bit of a dividend too. So that's always attractive.
Indeed. I know you like your dividend stocks, Alan, so thank you for pointing out Moonpig. I mean, it's obvious, really. I didn't even consider it would be on the stock exchange. Of course, everyone knows who they are, but yeah, you can obviously buy shares in them as well. And it's funny to discover that you can do things later in the Netherlands. It sounds, very Dutch, that. Well, you can get things delivered very late. You get a cyclist come round at 10, 11 o'clock at night delivering stuff to you. Yeah, it's a different, to what we have in the UK.
Yeah.
Either that, or you can have 2 extra pints of Orange Boom before you have to face sorting out the mother-in-law's card. You know?
Exactly. Yeah, exactly. Well, thanks everyone. I look forward to seeing how obviously at the end of the week we'll see what next week brings with the Bitcoin price and other stocks, of course, that are listed that are perhaps starting to move. We'll catch up later if that's all right.
Sure.
Sounds great. Thanks, guys.
If you enjoyed this interview, then give us a thumbs up, a like, or a retweet. Subscribe to us on YouTube or follow us on Twitter, and hit that notification bell to be the first to know when we release new content. There's loads of great content on our website too, across all our programs at stopboxmedia.com. Thank you for watching.